Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Paysafe. So Paysafe sold off yesterday by more than 15%, and just want to talk about its guidance for the year for the next 6 months. I'm going to talk about its leverage, and then we're going to talk about its valuation. So let's just jump right in. So on the surface, it isn't too bad. So you can see here the Q2, they reported 13% year-over-year growth. That was pretty much what was expected from the company. The problem is that this is a company that had previously at the back of Q1 guided for it to be growing at approximately 10% year-over-year, and then you look at this guidance for Q3 here, you can see that they're pointing towards a deceleration from Q2 into Q3. So that's part of the problem. So this is a company that came public via a SPAC. So already, SPACs have been in a very difficult period into 2021. So investors were already primed to sell this off. There was ample reason for a sell-off, irrespective of how they were going to put out their guidance. So in that light, given that the guidance was for sequential decline, investors were just like, okay, I'm done with this. The other thing that is worthwhile considering is that they're saying, okay, we're going to come back, and in Q4 we're going to be growing at 10%, and this means that between 2020 and 2023 we're going to be growing at a compounded annual growth rate of 10%. But investors are like, okay, it's just too volatile between each quarter. So this quarter was up 13% and is pointing towards sequential decline, and then it's going to be up 10% or 9 to 10% for the whole year. So investors are just like, this is just too difficult for a fintech in a foreign country to be growing. It makes it quite difficult to understand. I've been in this situation before, and you want to try and position yourself in businesses that they're quite steady and predictable. This doesn't mean it needs to be a boring business. This doesn't necessarily mean that it cannot be a high growth business. You just need to have some kind of certainty of what the growth rate is, because then you can handicap this, then you can price this slightly better. Okay. Another thing that I wanted to talk about is that they're making 2 acquisitions here, and together with those acquisitions, Pago Efectivo and the Safety Pay, the company, so right now it's at 4.3 times leverage, net leverage, and after these 2 acquisitions coming into Q4, they're going to be at 5.3 times leverage. I mean, that's really a punchy amount of leverage in the best case scenario. But you compound that with a company that isn't growing all that fast, and this starts just bringing problems. I'm not a short seller, but if I was a short seller and I see a company that's not growing very strongly and that they have so much leverage, this just becomes a no-brainer for me. And then finally, just to compound things even further, the company trades at 4 times sales. Now, if you want to compare with the likes of PayPal trades for approximately 13 times sales. Okay, so but PayPal is, PayPal is a global company. PayPal is growing at approximately 20 to 25%. It's a company, I know PayPal quite well. I follow it in many outlets. So, it's a company that just literally prints free cash flow quarter after quarter and growing free cash flow, even when they come up against tough comps from the previous year. It's still a growing business. You don't have any question marks there, and there you're paying 13 times sales, and here you're paying 4 times when you have absolutely no idea how things are going to play out. So it's just so difficult to make the argument that this is undervalued, and every investment has a price. But I mean, I don't know if paying 4 times sales for something that may or may not be growing at 10% organically is worthwhile investing in. If you want to find out what kind of stocks I'm interested, come over to Deep Value Returns on Seeking Alpha. I'll tell you the stocks I own, and we have a vibrant investment community that's growing, and you're welcome to just see what kind of investments in. I'm not going to replace you. I'm never, you or you, and I'm just a source of ideas, and you can find, okay, this is an interesting investment, and you can pick it up if you want to, and you're welcome to do a totally free trial. And if you like it, you stick around, and if you don't, you unsubscribe anytime before 14 days, and you're not going to get charged anything. Okay, see you soon.